Thank you guys for having me. My name is Kaushik. I want to thank Felina and the whole team for having me here and talking to you guys. Very excited to kind of share with you some of my my experiences and some of the lessons learned that I've been able to accumulate over the course of my, I guess, not super long career. Brief about my background. I spent 6 years at Goldman after business school. I actually started as an associate. I was a career switcher, and we can talk about, a lot of you may or may not be thinking about MBAs down the future, and we can talk about merits of that. But I was in the investment banking group as an associate in financial services. But when I joined, I was extremely fortunate. It was kind of where we were in the deal cycle that right after the financial crisis, I got to lead some of the largest transactions ever in FIG, and we were advising GE on their sale of GE Capital and related transactions. GE to sell down $500 billion of basically what was GE Capital. So I led that for Goldman. I also led the IPO of Synchrony, which was the largest since Facebook and one of the largest ever in FIG. So we can talk a little bit about what IPOs mean and how you do that. I also kind of worked on assorted other transactions, like the split off of Synchrony later, which was a $20 billion deal, the largest ever in FIG, et cetera, et cetera. So that was banking. Then I went to private equity. Actually, to Goldman's private equity fund and worked in financial services and technology there. All right, top question. So before I get started, I want to get a profile of the room. How many people here are freshmen? Okay, cool. So this side, so maybe 35, 40%. How many people are sophomores? Okay, cool. The other 35, 40. And then how about juniors? Okay, cool. So the other 20, and then seniors. All right, cool. So excellent. So good. Actually, it's a good mix of folks. And how many people have a sense of like they want to go into finance or related careers, especially the freshmen, sophomores? Higher, please. Okay, cool. So like 80% of you guys. All right. So I will preface the whole thing by saying, obviously my background is in finance, but you guys everyone should spend whatever time it is to understand what the lay of the land is in terms of careers, understand the different career options that are out there, as well as what you yourself think you like and are interested in the career journey, right? So I think it's the personal journey that everyone goes through, the things that you're interested in and things you're good at. Frankly, I think it's like the intersection of the things you're good at and the things that you're like passionate about. So I'll just preface all of this by saying I'm not trying to get more people into finance or like out of finance or whatever it is, right? So I think that's the personal journey that everyone goes through. All right, top questions, we'll go through this. Right, what is the nature of the work in investment banking and private equity? I think other things we'll touch on is like, how do I effectively navigate the recruiting process, which is, includes networking, and we'll hit on like resumes and interviewing, differentiating yourself, the career paths that we may not touch about since a lot of people here want to do banking, and then how do you think about your career, like 1, 2, 3, 4, 5 years out? Any other questions that people have, right off the bat that you want to talk about, discuss? Feel free. Anyone? Yeah.
I guess whether we go towards an MBA right away or we jump right into a career.
Yeah. I'll just touch on that really quickly. It depends on the school, but most require you to get 2 to 3 years or 4 years of experience. So a lot of people do banking, private equity, MBA, then like some whatever else. So I would just say everyone's different and kind of their profile and backgrounds are different, but I would just say I personally would defer that decision until you kind of have a better sense of your career, like your first 1 or 2 years. Then you could take the GMAT when you're in college and get it out of the way if you think that's in the future. But other than that, I wouldn't that isn't something necessarily I would think about until, after you have work experience. Anything else? Yeah.
I'd be interested to hear why you like it and what type of person you think is a good fit.
Yeah, sure. So I should repeat the question, but the question is why I like finance or more broader, what type of person. I think those are two different questions. I think in terms of what type of person is a good fit, I think I kind of haven't gone through this for so many years. I have seen people of various different skill sets and personalities and things they're good at and strengths and weaknesses succeed in this, in this career, right? And obviously finance is like such a broad term, right? You could do trading, you could do, strategy, or you could do kind of advisory, you could do investing, whatever it is under restructuring, anything under the sun. So I think it's a good question because I think you have to figure out within yourself as you do this, and this is why I recommend the best thing you guys can do in addition to doing things like the YSIG is actually getting real work experience, right? So that's the only way you'll know if you like something or not. And so I think you have to find a way to fit what you like into kind of what you're doing. And so for that reason, I'll get to kind of what I look for in candidates, and that I think will address your question. And then towards the end, I'll get to kind of my journey and like why I've kind of done what I've done. Other stuff, yeah.
Do you think it's imperative for younger members or younger underclassmen to kind of get into these early action programs or these like sophomore programs, all brackets? And if so, should they be preparing like with financial guides, or is it kind of just like interest and fit?
Yeah, and so it's a good question, right? So especially this is for the sophomores and freshmen in the room. Recruiting has kind of pendulum has swung to like being much earlier than even ever it was, and just I'm talking about undergraduate recruiting. And so whereas in the past we would, banks could ask you guys like, oh, talk to me about your summer experience in your sophomore year. If you're recruiting before even you have an internship, I think there's very little to talk about by way of like actual experience. So I've noticed, and I know this, is that a lot more of the emphasis is going to be on your self-awareness of why you want to do the job, and B, your understanding of what it is you're kind of getting into. I think that level of maturity and that level of knowledge about what it is you're getting into and kind of what work you've done it in order to advance that ball to show your interest in finance is going to be probably more critical than it ever has, just because you won't have as many experiences to talk about. So the onus is a little bit on you guys to like build that set of internships, whether it's school year internships, summer internships, etc., or by way of like complementary programs that you can do by some of these Inside series, etc., to kind of build that. So I would say the emphasis is on establishing that interest in finance as a whole, and how there's a lot of different avenues to do that. So I think picking one or two of those and then bringing those out is actually really important. What else? Okay, cool. All right, so we'll just quickly go into investment banking. So the role of the analyst, right? So if you step back, I know some of you guys nodded when I asked what an investment banking is. Roughly how I describe investment banking for those who are kind of still unsure is you're, as an investment bank or investment banker, hired by companies, be it Fortune 500 or across, whatever CEOs or boards of different companies, to provide them with financial and strategic advice on their, strategy and different alternatives. So that is like a huge. There's like a lot of things that could go under that, right? So if a company's looking to raise capital, if a company's looking to streamline some of its operations and sell part of their business, if they're looking to enter new markets, if they're looking to grow in a certain way, if they're looking to acquire some other company, they're looking to bankrupt into bankruptcy, restructuring, capital raises, IPOs, whatever it may be. So there's like a bunch of stuff. And if you guys spend a year in investment banking, chances are you'll get to do 4 or 5 of those different types of transactions within that year, right? So it's one of the reasons why a lot of people want to, think about going to investment banking, is that ability to experience like 4 or 5 transformative transactions. And that's the one thing to think about, right? The things you guys are working on, it's one of the 4 projects that you're on the table, but these are transformative transactions for the CEO and the companies that you're working with, right? So that's why you guys and your senior, VPs and MDs are dealing with CEO level, board level, people across the board, right? So the magnitude of the work that you're doing is actually pretty cool. So when I saw the deals that I was working on at GE, like literally on the front page of the journal, like for 2-3 months running, you kind of feel good about it because you're helping a company kind of really they're on their biggest, most transformative transaction in its entity, right? So that's kind of the role. And so when you kind of boil that down to what is the role of an analyst, your guys' role is going to be anything under the sun, but about 75% of it is going to be financial analytics, right? So you'll be responsible for financial modeling, like all the analytics behind how, whether you're going in for a pitch or a presentation, if you're doing merger analysis, you're doing all of that. So roughly like all the prep you're doing via YSIG and all these other things are to get you ready to be responsible for all that financial modeling. That's going to be your responsibility. The other thing to note as an analyst, and I'm not trying to scare you guys, but in school you have like study groups, or you have like, a right answer and a wrong answer, or like a teacher like telling you what's right or whatever. But in like when you go into banking, like you are kind of the last line of defense. Like you're running the model, so you're responsible for everything that's in the model. So in some sense, building that level of maturity and level of like aptitude becomes really, really important once you get there. All right, anatomy of deal, I kind of touched on this a little bit. There's just a lot of stuff you can do within banking, and that's why you're a financial advisor to these companies. So I won't kind of beat that into the ground. Interplay between M&A. So I get asked this question a lot, right? So like a lot of people are like, hey, I really want to do, M&A. But then you're like, all right, why? Or like, what groups are you interested in, et cetera. You kind of get like a blank face. So I think it's helpful for you guys to understand like what are the different types of roles within like what a banker does. So I'll roughly kind of just say, there's M&A, which is mergers and acquisitions, where you're the financial advisor, either to the buyer or the seller or to the board on acquiring companies or selling companies. There's industry groups, which some firms, like Goldman had M&A and industry groups in the same group, but some large bulge bracket funds or other firms have it separately, but industry groups is where you focus on a particular industry, like a healthcare, technology, whatever, and then you're kind of you're more in a industry coverage role. Obviously, capital markets, where you interface with equity capital markets, debt capital markets, when you raise capital for your clients, et cetera. Leverage finance is when you work with a lot of private equity funds to finance their transactions, that they're working on. So again, I'm going to go through this reasonably quickly because I think you guys have some knowledge of this, but stop me if you have questions. And then financial sponsors is more, again, with private equity firms in order to manage relationships and transactions. I'll pause there. Any questions on this so far? Yeah.
Can you talk about the value of being in kind of a coverage or industry group, right?
Yeah.
Like as opposed to like an M&A group?
Yeah.
Vice versa. Like, should we be shooting for the groups who do M&A in-house, or is it okay to?
Yeah, it's a good question. And does everyone understand that question? Like, no. Okay, so I can. So the question was basically, it's a good question. As you look at your banks that you're targeting and the firms that you want to get into, some firms, and I'll use Goldman as an example, which is my experience. Our mergers and acquisition function was within the industry group itself. What that means is I was in financial services, so I would cover financial services clients, but be the only advisor to financial services clients when they want to do equity capital raises, debt capital raises, mergers and acquisitions, IPOs, restructuring, whatever the case might be. There's other banks, I'll take JP Morgan as an example, where they have a separate M&A group and then they have a separate financial services group. The reason for that is their M&A group is responsible for processes. So it's like saying, and processes is a broad term, but if there's any M&A going on, so if, Pfizer is acquiring a healthcare company, if Dow, which is an industrial company, is acquiring this, if Tesla is acquiring something else, whatever the case might be, the M&A bankers are trained to be able to run that process. And when I say run that process, it means buyer-seller interaction, actually the negotiation in the process, the legal, documentation, literally the negotiation of the price, everything. So there's kind of the art to doing a deal, and that's what they do. So when you're in the M&A role, you just get a lot of exposure to how to do a deal. So if you really like the idea of like, look, I want to be the guy at the table or the girl at the table, like negotiating these transactions, like, I think that high stress environment is super exciting to me, then working in M&A gives you all that experience. The industry group, if you like, say I love healthcare and I really want to do healthcare, so I want to do everything around healthcare, not just M&A, but I want to help companies raise capital, whatever it is, then you do industry groups. So in my mind though, there isn't a big difference whether you go M&A or healthcare, industry group. You will get really good experience regardless. So I think I would say, unless you have like such a strong inclination that I really only want to do healthcare because I was a bio major and I like whatever the reason is, then I think that's fine to target that. But I would just say I think that should be one of the considerations in terms of M&A in-house or not, alongside with like firm culture, frankly, like your chances of getting, the internship or whatever at a place, how much you like the people there, the size of it, whether it's a boutique firm or a large firm, whatever these different criteria is for you guys. But if you have a strong preference that you want to do M&A, and I think I've met very few people who are freshmen, sophomore, juniors who are like, I was born to be an M&A banker or like, whatever it is, which is fine. But like, I think just you'll get a really good experience like regardless of what you do. So if people have questions on this, like, because I just like dissed you because you were one of the things I said, I've not seen a lot of people, then you can talk offline about your interest. But yeah.
So do you think that if you try to get an industry group position, does that pigeonhole you too much in terms of your career advancement?
Oh, absolutely not.
Okay.
Absolutely not. Because I think two things, right? One is the question was if you go into an industry experience, does that pigeonhole you over your career? I would say. And I came from a group which is FIG, which historically has been so like specific that like, that people think it does pigeonhole you. And I will just say this, first as an analyst, your first 2 years, your first like 6 to 8 months are just like getting like used to the job of what it is in terms of being in a client service business, right? So whether you're in industry, you're in healthcare, you know, industrials, telecom, whatever it is, TMT, technology, like your experience, your first 6 months, or even I'd say as far as 1 year, is going to be very similar across any group, right? Whether it's M&A or not. But I think more broadly, regardless of what group you're in, I think the deal experience that you're getting, and I think this is true for M&A or an industry group, is going to be like very similar. Like just because you're in the industry group, it doesn't mean you're not doing any M&A. I think you'll do a lot of M&A. You'll bring in the M&A folks to like, you know, to like help out on the M&A transactions, but they're also managing like 3 or 4 M&A transactions at the same time. So you're still responsible for their transactions. So I've seen like analysts, or I've recruited analysts on the buy side into like who've gone to like specific VC funds or telecom, you know, or technology PE funds from like a non-technology banking background. But I think it's important though, if there are things you really want to do or passionate about, I think you should go, you know, you should pursue that early, you know, as early as you can. If you really feel like you want to do technology PE like 3 or 2 years from now, then I think try to go to a technology group now, because you just get more experience. That said, a lot of PE firms, like it's a very generalist pool to start off with anyway, so it's not like you're gonna go to like pick your PE fund if that's what you want to end up doing, and then they'll put you in like any industry group, or they'll just put you in broad industry groups. A lot of PE, as an associate, your first year or two, you're like a generalist anyway, right? Unless you have specific interest or you recruit into something. So does that answer your question? All right, cool. Okay, so first in the back, yeah.
So kind of going back to the previous question, I had like a more specific question about that. I've had it said to me a lot that like if your ultimate goal is to go to a hedge fund or to go to private equity, you should be in a coverage group that like isn't FIG or not real estate and it's not sponsors, because like I guess we know like the way that we value like real estate and financial institutions and like using LBOs is very different from the way we would like model a consumer company.
Yeah.
So I was curious like what you thought about that.
Yeah, and I'm gonna like flip that around a little bit. So I think yes and no. So I actually think so. Having been in FIG, it's a double-edged sword. I think, yeah, you're not doing like traditional cash flow companies all the time. And what I mean by that, a lot of FIG companies are like balance sheet companies, for instance, so like insurance companies or banks or, you know, specialty finance, et cetera. And so you're not doing the traditional like, oh, you know, free cash flow analysis where you're like, this is how much the company makes, you take out depreciation. There's no concept of depreciation in FIG, right, for a lot of these companies, and whatever. So you go down and it's a cash flow, and then you put this much, you know, valuation against this cash flow or multiple against cash flow, and voila, you're at the valuation. So I will say this, I think I haven't found that, I mean, real estate is different because I think, but the reason why I think it's there's two things. One is, the reason why I think it's actually maybe true in one sense is that a lot of people that are in FIG actually, and real estate, they get like such a good in-depth knowledge in real estate or FIG that they end up like wanting to go into FIG specific funds or end up going into, you know, whatever funds, because like think about it, it's actually almost like irrelevant. Like I think you got to pick industry groups that are of interest to you over the long term of your career. So if you feel like you like FIG and you want to pursue FIG, and you feel like you have an expertise in FIG already, like why would you like start the clock over and kind of like want to learn something completely new, and then now you want to be the best you could possibly can, right? So that's one thing. The other thing is the people who haven't gone to FIG, and a lot of people actually that was on the second side, like some of the mega fund people that was going to bring back and do these sessions with, those people have gone under very generalist functions. So like one of my analysts was Blackstone, was obviously like was in FIG but went into like a more generalist capacity and has done tremendously well there. So it hasn't like, I haven't seen it as being like, it's up to you at the end of the day. So I think it gives you a really, like I think the FIG and real estate do the other thing of actually giving you a lot of technical analysis, like a lot of technical. It's a very technical group by definition versus some other groups, you know, maybe like a consumer retail, which is like a little bit easier to understand company, so it's not as, you know, technical. And so I think two things. One is up to you, and B, how you spin it. Like it's all like I think, and we'll talk about like getting to private equity later, but again, it's kind of who you ask. I haven't seen that. So for you guys, I want to touch on work-life balance right now. We can talk about that towards the end, but I think that has one consideration of, as you guys think about what's important to you. I think I said that at the beginning, right? Like if you got to figure out what's important to you, what drives you, and what makes you happy when you're at a place, and you do that by accumulating these experiences. And I think one of the big consideration is the culture and the balance that you can achieve at some of these places. So really like give it some thought if that it is super critical to you guys. All right, so I'm just do networking. There's a lot of words on this page. What I tell like my analysts not to do. So like just before reading it, what are some like trepidations, questions you guys have on networking? Or like, what is it even? Yeah.
Sometimes I feel like I have really good conversations with people.
Yeah.
We'll exchange emails, but I don't really know what to do there. And like,
Okay.
is it worth getting a coffee in 6 months? You know what I mean?
Yeah. And when you say good conversations, you mean like in person? You meet someone?
Yeah.
Okay.
Or by phone.
Okay, and so this is organically, like for instance, take whatever you're thinking about right now, the example you're thinking about. The question was, a lot of times I have good interactions in person and then I don't know what to do with it after that, right? And is that like after like a corporate event or something like that, you meet them, or just alumni?
Like women's programs.
Yeah. So I think so. It's a good question, right? There's 2 or 3 things about networking you want to establish, right? One is networking is just like feels like this scary word that a lot of people are like, oh my god, like I'm expected to like have this Rolodex of like 100 bankers on the street and like all these people are going crazy, like calling everyone, whatever. So I would just say like do what kind of works for you, but at the same time you've got to be like put yourself out there. And the reason why networking is important, right? Networking isn't going to get you a job. Like it's not going to be like, oh, this person I met, they were like amazing, and like we talked about the Rangers and like, oh my god, we had a great time. But like I think it's gonna help you on these like 50-50 decisions. So let me take you guys behind the scenes of when I get a resume book at Goldman, right? So I would, let's say you guys are on the Yale team, right? Yale school team. And everyone here and then a few other people puts a resume in. So I'll get in like 200 resumes, 250 resumes from a certain school or a couple of schools. There'll be maybe 6 people, 5 people with me. So like me, another, vice president or whatever, or like a couple associates and like an analyst. So the associates and the analysts go through this kind of 250-page book and like figure out, their job is to get from 250 or 200 to like 50 interview slots. So you've got to like, this is why like resume and networking are like the 2 biggest things, right? So one thing they're looking for is things on your resume that help you differentiate your candidacy versus someone else. So like, which when we get to resume, I say like the wording is really important, the construct, like how you construct it is really, really important, and highlighting the things that you've done, not just like a list of things you've done, but like thoughtfully, like, and kind of spacing it out. Also things like the first part of a bullet is more important than the last part. So I see a lot of people like talk about situation first before action. So I'd say you got to talk about actions and results before you talk about situations. Like, oh, like when I started, like this company was like going into bankruptcy. Like no one cares. Like start with like built model to help a company out of bank. You know what I mean? So like your attention span. Just think about it, right? 200 resumes, 2 minutes per resume max, right? That's already 400. Like that's way more time. You know what I mean? So like you got to like so that's one thing. So we'll get to resumes later. The second thing, right? Networking. So like, we go through the resume book. Any variations of this can happen, right? So we'll go through and be like, oh, and what's your name?
I'm Honor.
Honor?
Yeah.
Okay, cool. So I go through it and then I'm like, okay, like these are my 50 names. And then someone's like, oh, what happened to Honor? Like I met her like two months ago, like whatever. Or there's like your name comes up in like the question. I'm sure you have a background, but let's say your name comes up in like the yellow, like we don't know, like question mark section. Then I think then like networking really kicks in, because like, oh, these 2 people say I met this person, really can speak to. Then we're like, what are the challenges? Like, why don't you like the resume? They'll be like, oh, I don't know that she's like the good fit, or I don't know that she's like has this set of whatever. Like, I think she's kind of timid, or she doesn't have as much leadership roles or whatever on the thing. And then you're like, no, we had this interaction and it was great. So I guess what I'm saying is that's to help you guys understand why this is important, right? So now get to like how you do it and are effective with it. So I think the biggest thing is for your particular example, and I get to more general things, you should absolutely, like, I think getting to meet people in the industry already is hard, and getting to have like 1 or 2 like meaningful face-to-face or one-on-2 interactions is really, really hard. So you should absolutely, I think depending on the nature of the conversation, but I think as soon as you finish that interaction, send them a follow-up email saying like, really great to meet you, etc. I'd love to grab, 10 minutes on the phone with you to talk through X, Y, and Z. And then periodically through your like, school year, you should keep them updated on like the things you're doing, etc. Not things like you're doing in school, but like if you did case competitions and things like that, I think it's helpful to let people know. Obviously, people's times are limited, so don't go crazy. But I think if you're wondering like what to do with it, like fill out your relationship with this person, and then I think it's helpful to kind of have this 2-way street over a conversation. But then update them like 3, 4, 5 months down the road. Hey, remember we talked, I'm doing this for the summer, would love to catch, grab coffee like when I'm in New York, or whatever the case might be. And everyone's gonna have a different style, so like don't force yourself into a box. The one thing I will say is you have to think a little bit outside the box to network. Obviously, Yale has a great kind of institutional base, but I think, take advantage of your alumni base. I feel like Ivy League schools have amazing alumni, yet your students do not take advantage of the alumni base, as well as I think I've seen like non-target schools like crush the alumni network. So I think you guys just have to like little bit like, I'm not saying you are, but like get out of your complacency mode and like get out there and put yourself out there, right? And this is not meant to be like a dig. Just these are the things that'll get you into the world and kind of successful. The other thing is like talking to people like helps build practice. Like to your point on like I'm a little afraid, and I get this a lot. Like I don't know how to like start the first conversation, etc. You're like just do it. Like just send them a note and say, hey, can we get 10 minutes on the phone? And I've had 10s, 20s, 30s, 50s of bad informationals that I've done as I was going up through through the world of finance. So I think you're never going to know your strengths, how you're going to approach people in the conversations until you do it. So I just say it's intimidating at first, so just kind of get over it and do it. And then it's also about building relationships. Like I think the other thing I've seen is sometimes students tend to be like transactional in these relationships. And I think just kind of make it a two-way street. If you're a freshman or sophomore, you may not be. If you reach out to someone like Goldman or one of the bulge brackets, chances are like it's not going to be for a job. It's going to be more like, let me understand what you do so that I can like, start building that relationship. Know that like these actually let's say you summer somewhere and you get an offer and you're like, hey, I really liked this other firm let me see if I can like go get this, go if they have any spots open. Their networking kicks in because you can go back to the people that you network with already before you got the offer and say, hey, I had a great summer as X, Y, and Z. Can I would love to talk to you about, your firm and kind of, whatever. Or if you don't get an offer, that's another place. A lot of firms are looking to fill their analyst class like after the summer. So like when obviously let's say 100 people go to Goldman and they give out 60 offers or 70 offers, there's like still 30 and at Goldman we would recruit to fill 100 spots almost, right? So it's kind of you have these 20, 30 other spots that people are looking to fill. So just be aware of the process, and I think more likely the people that are going to give you a shot than some random person who's going to send an email, the day of like when recruiting ends, right? So I think just be like wary of that. I'm not going to, again, like I can go through a couple more things here. The one thing in here I'll say is, multiple avenues. So networking events, LinkedIn, alumni for you guys are going to be great. But understand that like your hit rate is going to be cold emailing and stuff like that is going to be pretty low. So like you got to have like a thick skin about it and just kind of go through the motions and do it anyway, right? For some of the upperclassmen, like what you guys, like what has worked for you in terms of networking? Yeah.
Yeah. My sophomore year, I cold called like 150 places.
Yeah.
And I think I got like 15 answers.
That's a good rate. Yeah.
Maybe,
Yeah.
And then I got a couple offers.
Yeah.
I would say cold calling, especially as a sophomore for you works.
Yeah.
Like smaller firms, because they don't have an HR team.
Right.
And they're not going to answer your email. So I think kind of put yourself out there, like you said, and take a good chance.
Yeah, it's good advice. Again, look, it may not be everyone's strength in the room to like be able to pick up the phone and cold call someone, right? So kind of figure out the right balance of kind of what's working for you. But I'd say like you should definitely put yourself, like if you're doing something for like 2 months and it's not working, like you got to revisit that plan and like, do it differently. That is one thing. Again, look, there's also like 5 or 10 or 15, 20 banks that may come here. And then I think the vast array of unknown is like the people that don't come here. There's a lot of, middle market, boutiques, smaller shops, etc. Your goal really should be to get an internship, like an internship somewhere, right? So I think if you can start with that as a goal, I think you can just go and like try to be cast as wide a net as possible with alums or with school recruiting teams, etc. And guarantee you, if you send 100 of those, you'll get 10, 15 responses. Like, unfortunately, that's the hit rate. But just imagine there's 50, 60 people in this room plus like all these other schools like reaching. It's just kind of the numbers are like that. So in some sense, persistence is the key. So yeah, there was like a couple more things. Yeah.
How does the networking for investment banking compare to networking for private equity?
Yeah, and do you mean like networking for PE out of undergrad?
Out of investment banking.
Okay, so networking for PE out of investment banking, the two things I'll say. Private equity, so the question is how does banking networking different from PE recruiting, networking? And because private equity recruiting now this year happened like the minute you kind of hit the desk, right? So it's imperative for that is two things. One is determine in your mind if you want to do private equity when you're in college. It's hard, right? So I think that's kind of, that networking is a two-way street. So when you're a senior or whatever, talk to your people who are ahead of you, talk to your people in the mentor, whatever the networks that you guys have, to like figure out if private equity is something you want to do, right? In the medium term. Then I think you have to kind of start building some of those relationships, laying that groundwork, like your senior year of college, basically. So again, don't go nuts, because how PE recruiting works is like recruiters like get on the phone and then they like have a list of people who go to all these different banks and they call you. So it's very like, it's not like you're out there calling like Apollo and being like, hey, I want a job, right? So recruiters like have lists of people who work at these different banks that come from these different schools to call you. But it obviously always helps if you call someone at Yale or whoever like at Fund X that you've already identified and be like, hey, I know it's super early, but like I'm going XYZ full time. Like I'd love to like, you know, hear more about this, because private equity is something I'm definitely interested in. So that's a very like sane email that I would respond to probably, you know? So I think like, you know, I would just say that. And then also like prepare during your senior year for private. Again, I don't want to scare all the underclassmen here, but I think, you know, we could talk offline too. Yeah.
As a follow-up to that, like I kind of have some questions, Luke, like if you are trying to learn about like private equity as like a possible route, but you accepted a job somewhere else full time, like do you think that like it would rub people the wrong way to be like already looking for something else?
Yeah, I mean, what do you mean people? Like
if you reached out to someone at the private equity firm, like you said, and say, I'm going here full time,
Yeah.
I'm interested in learning about private equity, they might be like, should you be careful about that?
I mean, yes and no. So yeah, I think I would be like, let's say you're going to like Goldman Sachs, and then like a lot of the PE fund, the fund that you're going to, like Aspet has like a bunch of like ex-Goldman people, then I think you shouldn't do that, because it's a small world. I think it's okay to make it very exploratory. You know, and be like, hey, I go to this school, you know, I'm going to this full time. I just, you know, I'm very happy that I got this offer, etc. Now that I'm in a senior year, I'm just like, you know, thinking about, you know, I saw your background. I saw that. Why don't you do it this way? I saw your background. I saw you worked in banking for the first couple of years. Then like, you know, like, can we talk about your experience in banking? That's not recruiting, you know what I mean? You can just say like, hey, I want to talk, and then you in that conversation, right, whatever, right? So I think, so I mean, I would say like try to be creative. Yeah, it's a small. I was working with someone who went to a different school who is going through the recruiting process right now in PE, and one of the things they're running into is like the bank that they're is like clients of these PE funds. You know, there's like this super hairy, but that's a different problem. You guys may run into that later, but I think like just in this whole thing, like, step back. We're all in this mode of being like, oh, I have like this checklist. I got to call 100 people like today and da-da-da, whatever. Just step back and be like, what is the point of what I'm doing? Like, is this thing, everything okay? Like, is the logic here make sense? Like, am I missing something that I shouldn't? Just like step back in kind of even in your strategy and recruiting to be like, all right, if you've tried, just for instance, you've tried JP, it's for that, right? If you step back and be like, all right, these funds have super Goldman presence. So like, let me not talk to these people. Let me go to like a different type of people. Like roughly like, I think the reason you're doing all this is not that if you call Apollo or talk to someone at Apollo, you're gonna land a job at Apollo. Like there is like less than 5% chance of like that specific fund and you know what I mean? Like just the way numbers work. I think generally what you wanna know is like, what is PE? Like what do you guys do on a day-to-day basis? Like what can I expect to do? What did you do when you were in my shoes to recruit? Like all the things that aren't firm specific. So my only point is like, again, try to be a little judicious in who you're trying to reach out to, and then be like focused in what you're trying to ask about and learn about, not just like get on the phone and be like, oh, I have a job now, like, can you tell me about whatever? So, you know, just kind of being judicious. But same way I would tell underclassmen, like if you have like 10 people on JP Morgan on your list and like you've gotten no responses from anyone, like, okay, it's time to like move on and like target other banks, you know? So I just kind of evaluate your strategy once in a while, that you're not like missing something larger that'll save you a lot of time. Last thing, yeah, okay, yeah, well, okay.
Is it possible that PE right out of college?
Anything's possible. The question is it even possible to like have a PE job out of a college? But I'm not like discounting your question. I'm just, I'll answer it. Actually, it's a good question, because I think like, it just, a lot of that depends on like your appetite for like PE jobs. There's so few of them, right? So your appetite for like, are you willing to wait till like X, Y, and Z period in your senior year to like figure out, you know, if a certain firm is recruiting, whatever. The other thing is, the reason why the predominant of people still go banking to PE, and there's a lot of people who go, there's more and more people these days who go into private equity because they are coming up with more like institutionalized training type programs. But I think in banking, like you get that like training in terms of deal on top of deal on top of deal on top of deal, right? When you go to PE, you have very little by way of training, right? So you got to figure all this out. So not only are you transitioning to a full-time job, you're transitioning to a full-time job in finance, and you're transitioning to private equity, you know? So it's like a lot, and you don't have that deal experience that like will make you kind of more operationally savvy on like how to get things done, you know, whether it's in finance or a deal. So I would say like, if it's a fund where if it's like so a lot of people I see who do that when I say anything's possible, like who are like mid cap or small cap funds, and they go into that right out of undergrad because there's a little bit more of like a, you know, coaching environment, and they hire like 2 or 3, you know, analysts, and you can kind of work with the associates on the deals and stuff like that, or they, you know, specifically recruit sharp kids out of college. I'll just say it depends on the firm and fund, but if you are like gung-ho on PE and you have a banking experience already, I'd say go for it. I just feel like the experiences could vary, and it's like it's a little bit more of a risk that you're taking on, both in terms of landing something, but also on the actual experience that you might get and your readiness for it. Does that make sense? Okay, cool. There was one more, yeah.
Starting from freshman year to senior year, what do you think the 4-year timeline would be for networking?
Good question. Okay, so 4-year timeline, and I'd say some of this like depends on you, right? And what I mean by that is, I think you should be spending a reasonable amount of time up front understanding careers and understanding what you like and what you don't like. It's fine to go into try to think about 2 different careers, etc. So maybe that pushes you off a little bit because you are like in the exploratory time frame. I'd say like even as a freshman, it's worth a shot to like even reach out to like first, and look, this is another like, I guess, behind the scenes thing. Like if you guys reach out to first years analysts, like you're probably not gonna get responses back, right? So because they're just so busy just getting up to speed on like the work that they're like just don't have enough time, unless you catch them on like a good week. I think so a good way to go is like second year analysts who are like alums from your school who've kind of figured the job out already, and so you kind of have a little bit more, you know, a little bit more like they have a little bit more time for you. But roughly for you, I think the bulk of your like your networking can actually start your sophomore year, and like actually you put yourself out there and like go out and meet people from these different venues. And then I think as a freshman, you can definitely start like as you get acclimated to school, like even if it's seniors in your group, like getting coffee with them on like what their experiences have been across the school, whatever the case might be. I'd say you could start as early as you want, willing to go for it. I would then say also like adjust your approach accordingly. Right? When you're a freshman, you're not going to go and like ask someone for like, hey, I want a job here. Right? You're gonna a little bit. Your approach is going to be like, I would like to learn more about the firm. Blah 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 blah. You know, so your approach shifts over the course of time. Then I would say your bulk of networking, I think, should fall sophomore to like junior year, with outliers on both sides. Cool. Anything else on networking? All right. The last thing I'm glad there's so many questions on it. I do want to move on from this, but the one thing I'd say is the actual meeting we haven't spent time on. Like it's critical to be prepared for these meetings. Like this is it. Like you've got your chance. Like you've got your 15 minutes with someone. And I think where I see a lot of people struggle is just come in there and be like, hey, I'm a student at University of Chicago. Like I've done this over my summer. I'd love, and then be like, I'd love to learn about, your career. And then you're like, they spend 15 minutes talking about their career, and then you were done, right? So I think the challenge is like structure these. So first of all, structure these conversations in your mind such that you ask them like bite-sized questions, so you can like jump in every couple minutes, and then you can kind of say something that relates to what they've said. And then you can kind of link it up to something you've done, or ask even more thoughtful questions that dig into this. The way to do that, right? One is like just absolutely perfect or make just as best as possible your like 60-second pitch, right? When you get on the phone, this is my background. This is what I'm doing. This is what I've been up to. Like this is why I'm interested in banking, and this is why I reached out to you. Like whatever that is, right? So I think you practice that and whatever, because those like first minute or two like is the first impression that you're making on this person, right? Then I think you've got to be prepared. Look at their background, look at the industry group that they're in, look at the types of deals that firm may have worked on, and then be prepared with questions that have things to do with like, hey, I noticed that you work, you advised, Walgreens on their acquisition of Dwayne Reed, like, kind of what are you seeing in like the retail space if that's of interest to you, like blah, blah, blah. So I think, again, don't go overboard and be like, I noticed you did it at 10 times valuation, like, how to, whatever. So I think just like get to like something that shows a level of like, understanding and interest in finance. And then the other thing is like, it's helpful to like, I think be like memorable in some way, right? In other words, like leave them with like one or two things that they can then say, oh, I talked to this, this person, she was great. She's the one who like, worked in this interesting startup over the summer, but was doing like a very finance role and also is tracking the TMT industry because she like was very familiar with like X, Y, and Z. So that's like two interesting things about you that they've taken away now that they can just like add onto their list and then send it along, right? So I think you gotta leave them with something that makes it memorable. So even then, that's kind of how you differentiate yourself from the 15, 20 other conversations that they're already having with people, right? And then lastly, like, it is, like I said, two-way street, but also like ask for advice. I think it's helpful to get people on your side. So just be like, hey, what is some advice you'd give me, someone, if you were, when you were in my shoes, like what you'd have done. And I think that helps them kind of like get them on your side by kind of being on your team, right? So I think little things like that can definitely help. Okay, I'm gonna I'm gonna go finish up networking and go to resume. I touched on this a little bit. Who here like wants me to spend a little bit of time on resume or has questions on like resumes and stuff? Or you guys like have A+ resumes? Okay, all right. So I'll spend a couple minutes on this. I mentioned some of this already, right? Construct your resume thoughtfully. It is not just a list of accomplishments, right? It's not like it's less like how you got into school. Like it's just like, oh, this is all the great things I've done, A+, whatever. It's more of like why and how, you've done all these things. Number 3 is really important. Focus on action results. I mentioned that earlier, but focusing on action and results, super important. It is also how you present things. Active language. I see a lot of passive language in the resumes, and we'll get to some of the maybe examples later. But develop this, not like was a part of. So things that are more like your self-driven type of language is important. It is humble self-marketing, right? I put that up there because we all obviously like, everyone is like, oh, we got to be humble. Yes, for sure. Let's try to be humble and not say like, oh, I was the one who like, saved, X company from bankruptcy. But I think you got to put yourself out there and say, look, like this is a piece of paper that is my list of accomplishments. So like, don't be shy or bashful about putting things that you're proud of, right? And then the last thing here, I hear a lot like, oh, I'm like a sophomore, freshman or whatever, and like I don't have relevant experiences. My only thing is either you have one of two choices. Either position the experiences that you have to like fit that thing or go get some experiences, right? So I think it's just like, I'm not kidding. Like, just like you're competing with people who are as hungry as you, right? And are doing things. So like, just don't live in this land of like, oh, I have great grades or I have great whatever. Like, I think where you see weaknesses in your resume, like fix them, right? And it's easy. And it's easy to do once you start thinking about it like that, I guess. Okay, so I'll touch on this a little bit. The 5 things I look for when I've kind of reviewed all these resumes, I felt like I was talking about these and then I didn't put them on a list, and it was like, people asked me to put them on a list, so I put them on a list, so hopefully that's helpful, right? Analytical ability, right? So what I'm looking for is the ability to solve complex problems. This kind of combines like, if you've done work, whether it's in school or in your work experiences, working with data, doing financial analysis, technical quantitative analysis. Again, you don't have to have worked as an investment banking analyst as a freshman. I think when you take internships or when you look for internships, or when you present the internships that you've done, like highlight the things you've done in a more like technical analytical sense, because then that really helps me be like, okay, I can trust this analyst with the level of technical, whatever complex problems that they could solve. Obviously, we know you're all really smart because you have the pedigree, but I think it's important to show that via experiences and things you've done. Leadership skills. Again, I think this is also harder when you're freshmen, sophomores, but I think putting in things, kind of team dynamic or case competitions, things like that, where you can just talk about where you've taken active leadership skills or leadership, being on boards of different clubs or starting something, whatever the case might be. I think it's important for me, as I look at candidates, I want to hire someone who's an excellent individual contributor, but also a really good part of a larger team to be able to work in complex. So it's like this balance that you guys are trying to achieve when you put this together. Drive initiative, I think I go through this and say, all right, like, what are the things that are driving this person? Like and to me, oftentimes it's actually results oriented. Like they're actually conscious about the impact that they're having in the different experiences that they're doing. So whether it's at an investment bank or at a startup that you worked at, like what is the actual tangible impact you think you're having? And that is important for me to understand. Interest in finance, I say this because a lot of folks maybe don't have a major that's like specifically business driven or have a lot of experience in the business world yet. I think showing this, and this comes across a lot more like when you interview, but just establishing like either via your extracurriculars, activities. Like if you don't have a lot of background in this, like go take a certification or go like complete something, go do an insight series or whatever the case might be that you learn about finance, but also shows that you're interested in finance. And lastly, communication skills. I think this is super important. That comes across in your bullet, right? Like making those things strong, but also when you do these interviews. So let me pause there. Anything on resumes that folks have questions on? Yeah.
Can you talk specifics on what outside resources you should be using? Like you're not a finance major, you're a history major.
Yeah.
Like should you be taking an accounting class and what?
Yeah. I think so. I think I would kind of maybe bucket them into, and I'll say this with like, you should also like consult, like obviously like, people who've just been in the process, but I think from what I like to see, it's a combination of like in schoolwork, like highlighting the math and like the technical courses that you're already taking. So like the financial modeling in finance, at least when you start out with, isn't that complicated. I think I look for people who have clarity of thinking, like able to solve complex problems. So it's not necessary that I'd say it's 50-50 or even maybe 60-40 that there's liberal arts majors in Wall Street versus, finance majors, right? So I would just say doing coursework, that's relevant. I think then like doing these types of clubs and things like that and being active members of these types of clubs that actually force you to like pitch stocks or pitch companies or think of companies in X, Y, and Z. The third thing would be like participating in like case competitions and things like that again, broaden out your horizon or your experience, right? Going to something that's cross school or things like, other sorts of activities. And then lastly, I would say like work experience if you can get that. Beyond that, I think taking like a Wall Street certification course, right? Or, Wall Street prep or something like that gives you maybe like a 3-day thing. Again, this is not mandatory, guys. This is only for people who are concerned that they don't have like that requisite like thing. And it's just absolutely not mandatory. Like, it's below mandatory. Like it's not, I don't see it in like 80%. But if you are concerned that you have a super non-thing, I think to just develop or let them know that you're actually interested in finance, I would kind of do these other things, including like some sort of outside help. But again, it's not at all like required. Yeah.
So speaking specifically to sophomores, I mean, I was told last year as a freshman that, of course, it's acceptable to have experiences from high school on my resume.
Okay.
But I feel like eventually that should not be there. And also, I guess, to add on to that question, I feel like I'm posed with the difficulty of having things I'm involved in at Yale that I can put on my resume, but are honestly probably less impressive when it comes to impact than things I did in high school, which might be bad about my personality.
No, I mean, I think it is what it is, right? So I think like it's a good question. I think it's obviously like I think a lot of several of you guys might have that challenge. Let me ask you this, right? Like when you're saying impact, do you mean like you're not of like a senior enough position where you're driving impact?
Or like I'll give you the example. It's like doing like entrepreneurship sort of accelerators and like founding startups in high school, and then being on the board of like a kind of interesting like passion project.
Okay, yeah. So let me answer it this way, right? So the question was if you have more meaningful leadership experience in high school, or you feel like you have that versus this, right? I would say if there are things like you founded something or you're like on a board of something, I think if they're like there's a threshold of like relevance and importance in my mind. So I think if you can have like, I wouldn't put it into your like work experience or something like, I would, unless it's a company you're still running or whatever, maybe if it's a company you built and start, from like 9th grade on to 12th grade, like on some of these situations, like, or if it's like the only thing you have, fine. Like, I think it's okay if there are 2 or 3 things that you're like super excited about that you have had impact on, you can put it on there. I would just say like the importance and the level, like how much I give that credibility and like, points for that versus college is going to be relatively lower. So I'll say like, I would limit that as much as possible. I know you're a sophomore, so to maybe like 2 things, right? Or something that and you can put 1 or 2 bullets on there, that's fine. Just make sure that's not the only things, like, you know, I would still put these other things, and then just like try to talk about it, like just try to focus on the things where you're actually making impact or whatever it is that we're doing at the different things. And then frankly, like just between now and then, like do more. You know, I think the fit personality part becomes like 60 to 70% of the interviews that I always did, right? Because I'm of the notion that you guys are all smart, you guys are all study here, or you know, all these amazing schools. Like I can teach you the technical aspect of the job, and you can go memorize the technical interview case packet, like or whatever, in like 2 days. And so like everyone here is gonna spit out like the, you know, whatever ways to value a company, right? So I think what ends up happening is your technical questions, which is why it's like all the way towards the end and like I don't have any bullets under that, is because like this is like a table stakes, right? So you're expected to come in, if you're interviewing with like when I was at Goldman or whatever at Goldman and other places, like I expect you to nail every single technical question that I give to you, because that's something that's totally under your control to practice. So everyone else that you're in there competing with has nailed that question, right? That's the assumption. So I'm not even gonna spend time on technicals. We can talk about technicals later if people are like a lot of cool questions about that. But that's something I think you can work on your own. Where I think I feel like we could add more value here today is on the fit side, right? Like the first kind of nature of fit questions, especially given where recruiting is starting off earlier and earlier, is like, why banking? Like, why are you here? Like, well, what you know, why should we hire you to work at this bank, right? Or this finance company, this PE fund, whatever it is. So the variations to that is frankly, like, it's gonna be like, why do you want to work in banking? So I think a lot of people struggle with this question, right? Or finance, or why do you want to work in finance? And you're a sophomore or a junior and you don't have that many experiences, et cetera, right? So good ways of answering that question is some way combining things you've learned about yourself or things you've learned from your experiences, also with what your perception is of the job. So, you know, great environment for professional, or the best environment right out of undergrad for professional development and growth, working on very, you know, complex transactions with talented, smart people, in order to make an impact on clients. So like those are 4 things you can just highlight off the bat, just checks every box that they're looking for. But it has to sound genuine, obviously, but I think like you have to make that bridge to get them to understand that you know what you're talking about, you understand the job, why you're here, you know, because you're so early. I'm not going to be able to spend a bunch of time talking about your transactions over the summer because you haven't had an internship yet per se, right? So it's really, really, really important. And I've talked to a bunch of people over the last, you know, few months who are like, you know, just coming into banking, and I think for them, this is where they spent the most time in the interviews on, right? So and then later on, right? I have this question then there twice. Why you'll be a good analyst? I must have thought it was like a really good question. So, but you know, I think just also coming up with like your own strengths and reasons why you think you'll succeed in finance. The whole point of this first section is like, I want to understand, do you know what the job is? Do you know where you're getting yourself into? Have you done the diligence on like your own career path to pursue this job? Because if you haven't, then I think that opens up a whole lot of questions about like, will this person be successful in this? Do they know what they're getting into? Like, it is obviously a very intensive and complicated job. So I think you want to address all those up front. Then I think we get to personality and fit, and here's where I think I want you guys to spend a lot of time preparing for these interviews when you get to that point. One is, again, your story, right? Your 90-second now, not, you know, a 2-minute story on why you're here. Really, really important. And again, I'm not going to belabor this. When you guys get to this point, you can we can revisit this, but like understand, like picking out highlights of from your own career or your life to date. You've done a lot of tremendous things, right? Starting from high school or on to now, like picking the 2 or 3 things you really want to highlight and then bridging the gap between how that got you to where you are in terms of pursuing this job. I think super important. Other things that we always ask about, what are your strengths? I think this relates to like your own self-awareness. I really want to get to know like how aware are you of your strengths and weaknesses, like what you do well and what you don't. At Goldman, we would ask tons of variations of the weakness questions, like what would your team members say are your areas to work on, like what does your manager give you as constructive feedback, like what is the feedback you've tried to work on, like whatever it is, like different variations of this question, because I think we want to know like your own self-awareness, and like everyone has things to work on, right? So what is your own understanding of that, and really put yourself out there to like tell me how you're working on it. So like and I'm sure you've heard this example, like a bad answer to this question is something like, oh, I'm like too detail oriented or something. I know everyone talks about that, but it's like, it's not a good answer. I think you kind of are just like complimenting yourself, right? I think you just have to, I think a better answer would be like, I feel like I am detail oriented to a point where I often don't step back and look at the big picture, and I need to do that more often, right? And I've started doing that. I think that shows a little bit more maturity of saying, all right, look, like I understand, and in that case, detail-oriented isn't a positive because you're not stepping back. And so just kind of like work on these things in your own mind, see how they come across when you say it, and like you say it to a friend and then they laugh at you, then this is like not a good answer, right? So I think you just kind of use that kind of judgment, I guess. What are you most proud of? I think the other thing I want to understand is like situations you've worked on in team or in team settings. So like if you guys have like had challenges or you've had to overcome stuff, like I want to hear about all that because I think it shows depth in your personality. All right, so I'm not going to spend time on this next. Yeah, go ahead.
Quick question, just for the why banking question.
Yeah.
Are the answers to those normally like the ones that you would look for, more sort of like check off the box questions, or like do you also expect there to be a story describing why?
Yeah, it's a good question. I think I would just say like the question is with the why banking question, do you expect like just the checkboxy answers or like something more? I think it has to be a combination of something that's genuine in your experiences that has led you to this, right? So I worked in consulting, or I worked in this function that like exposed me to the financial markets and deals that got me excited about, financial or something like that, and now I want to do this, right? So it has to bridge the gap between what you've done. So it just can't be like, oh, this is, like JP Morgan is the best firm, and I mean, not that you're gonna do this, but like it's a great challenging place for me to work, such that I would just in the next interview say, oh, Morgan Stanley is the best place, so it should be like somewhat like customized to your own experience, but also to the firm. But I think, look, whatever feels like right to you, but also helps convince me that you actually know why you're getting into this field. So I think if you actually are genuinely like, look, this is the best learning environment to me right out of undergrad. I want to really learn about companies and help solve their problems. And I want to work on like complex transactions because I'm really excited by the whatever complexities of whatever blah blah blah. Right? I think that actually then you're like, okay, I get it. Like and I've done X, Y, and Z that has kind of told me that I really like this part of that job, and that's why I'm doing banking. So I think you're like, okay, now like he kind of gets a job, he kind of is relating to what he's done, and he's aware of like what his strengths and weaknesses are. So like, okay, this is a good enough picture for me. So it is, I think, less checkboxy, more of like yourself into that shoes of like why banking. Does that make sense? Okay, cool. There was one other question. All right, good. Well, that's good. So that is that was on interview. So I won't spend as much time on succeeding as an analyst. Like if folks have questions on this specifically, this is like once you get a job like an intern, like what can you like do that? Because I think I'll hit like 3 or 4 things here, or as a full-time analyst, because I feel like there's so many underclassmen, you may be like, oh, I don't even like, that's not even relevant to you right now. But I'll say maybe 2 things here. One is like ensuring the top quality work. And I want to put this up front. Obviously, we all are trying to do the best job. I think where people, and everyone goes in with the notion of getting an offer, right? Everyone goes in with the notion of like, I'm gonna be the best analyst ever. And I think you guys are all capable of doing it. I think what inhibits people realistically is like attention to details and like just the lack of like, pride in your work. And I know it's really hard to say this, but I think like what I've noticed year in and year out is like taking that extra effort to like double check an email that you sent, like especially at the beginning, right? Taking that extra effort to like print out someone's comments, check them off as you go through it, print out an email before you send it through. Like little things, and we may not think it's like super critical, but it's like a collection of experiences, right? So if my perception of any one person, and your name? Luke. All right, my impression of Luke is not just like in an internship is different because it's a very compressed timeline, but even in an internship, it's a collection of like 3 or 4 or 5 different experiences, right? So if the first experience, like there's a typo in the email, I'm like, okay, I'll let it go. Like the second, there's something else, and then the third, whatever. So I just because you guys will be in a situation where it's high pressure, everyone wants everything from you in like every possible time of day. Like it's really hard to like so set yourself up to success by like allocating more than enough time to do certain work, right? Or like communicating to people about like the deadlines. Hey, I'm working on these 2 other things. I don't know if I really want to get to this, but what do you think I should, how do you think I should manage these 2 other deals that I've got going on? Whatever the case might be that like inhibits you from getting the top quality work, because at the end of the day, you're sending that email that is your work product. It isn't like my team did this. This isn't like no one looked over this, so like I didn't have time to check this. Like it's your product. So like I want you guys to like just take pride of ownership when you kind of start thinking about these things. Responsive, reliable, you guys will all do that. Communication with, I don't want to spend a lot of time on this. Teamwork, this seems like a freaking like Oprah book, but be positive, like blah, 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 blah. I think you guys will figure this out, right? I think it's not, be efficient about managing your time. Okay, so any questions that folks have? The one thing I do want to say, yeah, I'll get to your question, but like making an impact on those around you is important. I think we tend to become very like internally focused when we start working this or any type of job. It is important to develop relationships and like just like help other people out like around you, just be a citizen, like try to make things better. Like if you notice, for instance, like if you're really interested in like the IPO markets that are going on, but then there's no weekly like IPO news that your desk puts out. Like if that's interesting to you, like take the initiative and like write up an email every week and send it out to the group, like people aren't gonna like chastise you, for doing that. So I'm just saying like make things, and if you feel like people are struggling around you, whatever, like offer help and things like that, because it is, I think, in the finance world especially, it is a very like lonely journey, and I think the more you can try to make impact on people around you, it actually collectively builds up like your own sense of like fulfillment in the job, right? So I would just say that, and find ways to make your job fulfilling. Like we can talk about that offline, but like just that's going to be really important as you kind of embark on your careers here. Yeah.
Can you give an example of 11?
Help your associates. Yeah, I think like look, I think this is depending on the person, right? The bullet is basically says like you help, play the game a little bit where you help your associates and VP stand out, and like, but also find ways to like vocalize your views. What I mean by that, right? I think analysts sometimes, it depends on your personality. Sometimes people will like go through and they're very like timid because they don't want, they think they don't know like everything, which might be true, right? You're just starting, and then you're like, oh, I don't want to piss people off by like voicing what I think, or I'm just being told to do something, so I'm going to do it. So that's fine. Like that's an okay approach. But if you go through it and let's say someone asks you to do an analysis and the night before, and then you work on all this stuff and you're like, this doesn't make sense. I shouldn't really be looking at revenue growth in this industry. I should be looking at like, earnings growth, because there's just a lot of like noise in between cost of goods, whatever the thing is. I think you're very much in your own right to like go to your associate and say, hey, look, I know we've been doing this, but in this segment of this sub industry, I don't think revenue growth is the best metric to look at companies. I think like that's what I mean by vocalizing your views. Like don't just like do the things you're being asked to do because you think you don't know. At the same time, like don't go into the meeting with like, you're not going to do this, but I think I put it on here because I've seen people do this, and like just be like, oh, we were asked to do this, but I really think revenue growth or like earnings growth is a better way to do it, right? I think everyone's going to be like, but no, because of X, Y, and Z reasons. So I think just picking where you want to like really voice in it, you will develop your own voice and confidence as you go on through this, but just don't like inhibit yourself. Like speak up when you want to, when you need to, but just do it judiciously. That's all that means, right? Does that make sense? Okay, cool, yeah.
How do you know when to ask for help? Like there's a very thin line between being too meeting, asking too much, and asking too little.
It's a great question. The question is, how do you know when to ask for help? This is like one of the like biggest things. I think people are sitting there like literally like analysts are sitting there and be like, shut. So I think, so it's just kind of like, I think, that's kind of 2 or 3 things here, right? One is like, look, situational, everything, and then when I keep going back to personality and fit, because this is 80% of this job is judgment. Like I'm hiring you guys, or we're hiring you guys are getting hired, and you'll be hiring other people in the future because of their judgment, their ability to make decisions when things are ambiguous, right? That's what I mean by judgment. So in this case, like, if something's due, I'm going to give you 3 or 4 examples. If something's due tomorrow and you don't know what to do, obviously you get help, because that's like a critical situation. Something's due a week from now and someone's given you like a day or so to do it. I think the critical factor there is, have you done enough on your own to understand the problem or understand the situation and understand like where you're running into issues, and then have a potential proposed solution for that problem that you're running into. Okay, cool, yeah.
So I've heard a lot about the importance of finding a mentor in the workplace.
Yeah.
So what advice do you have for kind of not only like finding a mentor, but also having meaningful work relationship?
Yeah, good question. So I think like you want to. It depends on the person, right? Some banks like link you up with a mentor, right? In certain cases, and then sometimes you have to kind of do it on your own. I think you should start with like either not people you work for, but like people you work with or like ancillarily with. And you should have like 2 or 3 different trees of mentors, right? One should be like certain alumni groups that you're part of. I think it's helpful when you start to be like, hey, you know, I just started, I'm a Yale alum, like, you know, I noticed you were as well, like, can we just like grab coffee? I'd love to hear about, you know, how you navigated your first 6 months of this, right? Great place to start. And that way, like, when like shit hits the fan and you need a mentor, you're not being like, oh my God, like I have this situation, like I've never met you, but like, can you help, right? Kind of thing. So I think that is one thing. The second thing is like in your own group, maybe it's like, let's say you're in healthcare, you're working on pharma, and then there's like an associate or analyst who you've met via something else that like is working on like bio, whatever, right? So I think doing across groups helps because then I think you have people you can like sanely talk about things. I mean, I'm telling you guys this journey is very, very like, can be lonely at times. So this is why it's a really good question, because then you got to find avenues to like really like find help and like not help is not like just get support as and when you need it. Especially your first 6 months are very challenging. And the third thing is just like look outside, I mean, within the group, but like even look outside the group, right? Maybe there's like women in business for your, you know, whatever the affinity groups that you're part of. My point on mentorship is just like naturally build those things and you'll reach out to 10 people and you may only click with like 3 people or 4 people. I think that's fine. That's again, back to how we network, right? You're just not gonna get, you know, 100%, you know, retention on everyone. But I think it's just important upfront and just to do it early, just kind of do it with like a 2-way street, but also offer them like, be like, hey, like, you know, if you want like analysts to like get together and do something, like we're happy to help or something like that, where it's kind of a 2-way street. I think all that help, and you can also do it with seniority. Like have an MD mentor who you go out to coffee with once a month, or you know, once in 2 months, just to keep yourself like even aware of what's going on in the group, right? I will say this: when you start working, you will have no time for like. You feel like you have no time for mentor. I would say like carve out every Friday or you know lunch or 2 p.m., 4 p.m., whatever you need to do to have that sense of sanity and connectivity with people, because that's the first thing that'll go. It'll be your gym membership, or not membership because you'll be members still, but you just won't use it. And then you're like, you know, your interaction with human beings, because you'll just be, you know, with your headphones on your computer, right? So I think just try to like overcome those. Yeah, in the back.
I'm a senior now, and like over the past 2 summers, I've collected a few mentors, but like 4 of my biggest mentors have left. Like, what do you think is
left the firm you're going to?
Yeah.
Okay. Yeah.
The firm that I'm going to. Like, what do you think is the best kind of like course of action now? Like, is it worth trying to continue a relationship with them, and like how to go about that? Because I feel like this awkward conversation being like,
right.
Oh, I heard you left. But,
right.
Like, how are you?
Right. I'm not a comedian, but I'm gonna say like. Is that you? That's a problem. No, I'm kidding. But no, I'm totally joking. But no, I think, so anyway, look, I think, yes, the world is small, right? So you're going to be, so it's funny because at Goldman in banking, the partners and MDs who I was working for and all the GE stuff who gave me the opportunity to lead the biggest transactions, now I'm their client. I'm hiring them on the deals that I'm on. So the world is so small. So like, you know, so I have an excellent relationship with all my partners at Goldman. We have an excellent personal relationship and we have an excellent business relationship. So I'm not saying that you need to work and hire everyone you work for or whatever, right? But my point is the world is really, really small. But I also think it's hard to find good people you connect with and like, you know, go through. So whatever they're doing, like A, they have experience at the firm, B, they have experience kind of ancillary, and there's a fit vibe that I think you've developed with them, whatever. So there's absolutely no harm in doing that. I think if it like is getting in the way of like you getting work done, I think it's another problem. But I think absolutely. But I think you should then now find new mentors that are gonna like help you, because mentors can help you in like different things. Some people help you with firm specific stuff. Some people help you with career specific stuff. Some people help you with life specific stuff, right? I think as you leave the school setting, I think you just have to find avenues to get that support. So yeah, I'd say absolutely keep up with them, you know, keep tabs on them each way, etc. See how you can help each other out, you know, and then also now embark on a journey to like find new mentors within that capacity, right? Cool. What else? I thought there was one more thing. Okay. Okay, cool. So we'll kind of finish up. I'm not gonna do private equity. It's 8:40. Any questions that folks have on PE? Like, I won't do this, but let's just ask. The one difference, since I think, one thing I'll say that I should be remiss in saying is that the one thing that I look for in private equity candidates that's different from when I look for banking candidates is this number 3, the investor mindset. Like, the biggest difference between PE and banking, obviously, in banking you're an advisor to a ton of different clients. In private equity, you're a principal, right? You are responsible for making investments for your fund. That's effectively like your scoreboard, right? So I want to see, when I interview candidates in private equity, like the ability to take an investor's point of view, to really understand, like the first question I'll ask you is like, I'll say, hey Luke, what deal did you work on, right? You'll say, oh, like I did the deal where like, we raised money for Tesla. And I'll be like, well, okay, would you invest in Tesla? And then you'd be like, yeah, I mean, they do this well, they do this poorly, that's great, but like the bottom line is, would you put your money, would you write a check to invest in Tesla? And you say no, I'll be like, why? If you say yes, then I'll be like, why? And then at what price? So my only point is like whatever thesis or whatever you guys do for this is just starting to think about things like, and the reason why I bring this up now is because when you go into banking, right? Like you'll just be doing deals or whatever and collecting the set of like deal toys of like things you're working on. But I think the really critical thing to do is understanding why these companies work, how the way they work, what are the positives, negatives about it, and effectively like, would you invest in this company? Like, do you think this is doing a good job? Like, yeah, you're an advisor to it, but like, if you had to put your pen to paper, would you do it? So I think that's the one thing that like a lot of banking analysts like struggle to like establish in an interview. So I would just say, again, this is way in the future for a lot of you guys, but just note that. Everything else, I think, just the other thing is ability to execute transactions. So now you're not in the realm of like, can you just execute a model? When I hire you as an associate at a PE fund, you're running the deal. You're doing the financial modeling, you're doing the industry analysis, you're managing the consultants, you're managing the auditors, you're managing the legal team, you're doing negotiations, you're doing management meetings, like whatever the case might be, you're in some way responsible for all that. So I really need to get a sense of you for like being able to execute these things. Again, freshmen, sophomores, like just forget the last 10 minutes and then like, you can address it later, right? All right, so I will end with this is kind of a list of like things that I've learned. And again, this is like, I'm like 30, so this isn't like Warren Buffett's like principles or whatever like that he writes, right? Or what Dalio did, but it's just kind of like, I think what I wish someone had told me maybe when I started. So you guys all can take whatever you want out of it. But one thing I say is like, pursue the things that make you like happy, fulfilled, and impactful. I think over the course of your career, it's okay if it isn't like that first thing that you do out of undergrad and there's like positive, negative things in it. But I think over time, just think about that in the back of your mind. Second thing is like, a lot of people are like, oh, I don't know what I want to do with my life. I think as you go through this, like challenge yourself. I think the one thing to think about is just find the intersection, whether it's at 25, whether it's at 30, whether it's at 40, like of what you're good at and what you're really passionate about, and that's where you'll be like the most successful. I'm not going to go through all of this. We talked about networking. There's a different pathways to career success. Your first job is not your last job. Like this is like the biggest like coming out of like, stressful environments or just coming out of like competitive environments. I think people, it's a 30-year career, right? So I started in management consulting and I felt like, and still getting to principal by 30, it's like there's things that had to go like right in my way, but there's also things that didn't go my way. So we all have our own setbacks. So like just look forward and kind of keep going. Preparation, we talked about that. Ownership, we talked about that. Challenging, I think two more things. Learning non-finance things, really important. I think if you have skills and other things that you guys wanted to do it, we're in an extremely like more technological world. So like the finance function is being disrupted also. So like just, be aware of that and kind of diversify yourself. Fixing mistakes. The one thing I see with analysts, like people tend to like try to cover up mistakes. Like I've done that plenty. Like, oh, this is gonna go away. Like it never goes away. Like 6 weeks later, they're gonna be like, what was this? Like, why is this like model not working or whatever, right? So I think just fix them. And then career is like 75% luck, and I've been more lucky than I've been good, or whatever the saying goes. But like, just put yourself in positions to be lucky. Like, be prepared when you get the chance, and then do that, right? So I think just that. So I'm gonna end on that, given the timing. Does anyone else have questions that they want to just ask? Anything else? You guys have been very like interactive, which is awesome. But any final things? Yeah.
Something that like surprised you about finance.
Oh my God, surprised me about finance. Okay. I guess I think the one thing that's surprising to me is just like how much responsibility you can get like at an early, like I'll be honest, like I didn't like, and it's a function of like I think just because it's such a thin, like finance by definition is like very, very thinly staffed, and the downside of this is just like, you know, the downside of this is like your time is at a very much of a premium. You don't have time to do all this, but like I've had my analysts go work with CFOs, you know, because I just haven't had time to do that, right? And the same for me, my MDs have had me kind of go work with like large companies. So it's just the level of responsibility you can get early on in your career, as long as you kind of seek it out. There's one more, yeah.
What are some of the best questions you can ask when someone's networking with you?
Oh, like what is the most surprising thing that I've learned about finance? No, I'm kidding. I was like, sorry. The question was, what are some of the best questions I got asked when I was gonna say that was a good question because I just like almost me. I think like there's a lot of variations, like a little bit on like like a combination of something that like is naturally in the trajectory of the conversation are really, really, you know, really interesting. When someone asks me questions like about a deal that I've talked about, and then it's like a very thoughtful question on like, oh, with this happening in, you know, in the industry, like how do you think like 2 years from now would you still do that deal that you did 2 years ago? That's a good question, because I'm like, well, you're right, because like there's all these other things going on, like probably not, you know. That's a good question. I think the other thing is like you know, things like people ask me like, there's actually, Honor asked a great question, like what have you done, like what may you have done differently like in your career? I think that forces you to like self-introspect. So the way to ask questions though is like, even when you ask questions, like figure out what you want. Like everything in your informational interview should have a purpose. Like if you're asking a question, is it to demonstrate that you're being thoughtful because you haven't had the opportunity in that informational interview to be thoughtful? Is it that you want to demonstrate your understanding of the industry because you haven't had that opportunity? Is it to make that personal connection because you haven't had that opportunity yet? So based on that, like ask the question that kind of fits into that, right? So if you haven't had time to like make that personal connectivity with that person during that informational interview, I would say like ask them something like, you know, what are the biggest lessons learned? Like, would you still make this decision that you did, you know, whatever, you know, what we have done differently about your career? What are you like the most, you know, what did you, when, you know, did you like, it seems like you went out on a limb, like going from banking to PE, like, you know, 3 years in, like what was that, or whatever the question is. I think anytime that like there's a natural progression from what we've been talking about, exhibits an amount of thoughtfulness about the conversation, doesn't seem too rehearsed, and is somewhat personal, I think any of those things are like good questions. I gave you a few examples, but anything in that arena. All right, I'm gonna stop because we're running late. If there's anything else, you guys are welcome to stop. If you're interested in Elevate, give Hudson all your emails, and then if you have any questions, I'm happy to stay for a little bit and answer anything like individual that you guys have. All right? Cool. Yeah, no worries.